We're going to be going over the master pattern and how to practically apply it to your trading. The topics that we're hoping to cover are what is master pattern and why is it important? How do you actually define when it's taking place in the market? And then finally, how do you use it to get a strong entry into the prevailing trending direction? Master pattern is the movement in the market that allows institutions to place trades of their own in high liquidity areas. Commonly referred to as the whipsaw, you've most likely already dealt with this kind of movement if you've ever placed a trade in trend, gotten stopped out, and then very shortly after, the market ended up pushing the direction you thought it was going to originally go in the first place. It's very, very frustrating, but we're here to tell you that it's actually a little bit more structured than you might initially think. So using a long market as an example, the ATS basic strategy is looking at your higher time frame's most recent expansion line and seeing that price is above that. Then shifting over to your entry time frame and waiting for a pullback below the most recent expansion line. Where the master pattern actually comes into play is looking exactly where the market is likely to pull back to, and then once it surpasses that level, allowing you to get a much better chance at getting a strong entry into what we're expecting to be a rotation back in line with the overall trend on your higher time frame. So let's go ahead and talk about how to actually define what a master pattern is and how to see it actually taking place on the chart. So using the box all the way over to the left here on our example, we can see the price pushed up to the long side, and we would call that an expand high, and then it pushed down to the short side of the box, and we call that an expand low. Now we can see that it formed an expansion line after it broke out. Now that that criteria is taking place, the expand high and the expand low, we would refer to that expansion line as our origination point. That's going to be a little bit more important as price starts whipping back and forth around this area. So this can also play out the opposite direction as well. After that box, if we had an expand low followed by an expand high, that would also be a master pattern origination point. What you would not want to count in there is if we had an expand high, formed another contraction box, and then price dropped down and took out that lower liquidity line. Price has to go through an expand high, expand low, or expand low, expand high without any more contraction taking place. Then you are able to count it as a new master pattern origination point. So now that we know for sure that we have a master pattern origination point, this is where the potential whipsaw begins. So from our expand low, we went and took out an expand high. So that would be 1, 2, 3 legs of expansion. Every time you form a new expand high or expand low point, the previous expand low or high point becomes a target. So let's go ahead and go through this one at a time. We had expand high, expand low, expand high, expand low, expand high, expand low, and then expand high one more time, but that ended up being the trend. Using a long market as our example, we ideally want to be entering at the expand low points. So every time that we set up an expand low and then it surpasses it, that would be the overall range that we'd want to enter. So that would be here, here, and finally here. So by using the master pattern in this way, it allows you to get a strong entry and test your theory on what you think the direction is going to be in the market. There's certainly much more nuance to the master pattern than what I've presented here, but this is just meant to be a very simple dumbed down version of what you can expect by looking for it inside of your own daily trading. That all being said, now we're going to go ahead and jump over to some of the live lessons that we've done on the master pattern during some of our live webinars. Recorded segments. So what we're planning on going through with this is 1, identifying origination points. So how to do that. And then 2, finding a strong entry with those origination points. Namely, something I like to, there's a really great example, wicks against trend. So that evil wick where you're in a trending market and that wick comes down and, snaps you out. So how to handle those, which this will help you with. And then 3, how this fits in with the basic strategy. So we're going to be covering those 3 things, and then we'll kind of wrap it up with any questions that you guys might have about this. Okay, So the first subject is identifying origination points. So this is a very simple thing and just really want to drill down on it. The actual criteria for identifying an origination point for the master pattern, which the master pattern, just to reiterate what that is, the master pattern is when price breaks out of an expansion and it expands low or high and then back and forth, and it's the whipsaw out of an expansion range leading up into the trending phase. We can see it's happened. We're still in the midst of this one up here on the 4 hour, but we can see it happen right here. Broke out high, so expand high, expand low, expand high, then it comes back, and then price settles, and then it goes into a trending market. So it's how to deal with that and how to identify it. We're mostly going to be focusing on the entry time frame as well. So anyways, that's what the master pattern is. Now, how do I identify an actual master pattern starting to take shape? Very, very simple. When you form a new box and price breaks through the low or the high of it, through the low, through the high, that is a potential master pattern right there. And then it gets a little bit different if you're in a trending market, because at that point it could continue pushing. But if you have a expand low, expand high, and then expand low once more, like we see here, then that is the beginning of a master pattern. And you'll find that usually right at the end of a trending move. So that's how you identify master pattern. Let's look for a few more just to make sure that this is well understood. So we've got one right here, expand low, expand high, and then we never formed a box, and then we had our expand low. So that's one other thing. If you have an expand low and an expand high before a box is, and a box is formed before the high and low is taken out, then that would not be considered a master pattern origination point. Let me take a look at that real quick and see if I can't find an example. Okay, this is one. This is a bit of an odd example, but we had an expand high and then expand low. So through the high of the box, through the low of the box, but we formed another box inside of that cycle. So that would not be considered a master pattern origination point. So take that and you can apply it to your smaller time frames as well. Let's see if we have another example of that, because that's probably one of the aspects that can get a little bit confusing. Happens pretty frequently inside of small ranges. Yeah, this would have been this would not have been an origination point right here. So we had an expand high, we almost had the expand low, but then we formed a new box, and then we had the expand low out of this box. So this would not be the origination point. Now, what that actually changes is just where you draw the origination point from and what you use as your low. So let me explain what that means. The origination point is where you're going to find very often that the market goes back, tests, and then the trend takes off from. So let me go back to that last example right here on the 4 hour. So we formed a master pattern origination point. We had an expand high, expand low, expand high, and then it came back and price rotated or settled on the origination point before going into trend. If you correctly identify where the origination point is, then you'll find it's a little bit easier to see when price actually does settle. So right here, we had our origination point actually form right here. So this would also not be an origination point. We had two boxes form after this price broke out to the short side. So we had expand high, expand low. It expanded a little bit further down. I don't know if any of you remember the lesson from last week, but we were talking about boxes at the lowest part of the range, that those are a little bit more reactive. That would be an example of that happening right here, where price rotates off of the lowest box inside of a range that it forms, then that ends up being the entry. So anyways, this back to the origination points, this would have been the official origination point inside of this range. And we can see that price came back and it went a little bit through, but right after pushed up long, came back, retested it, and then took off in trend. So the form that it takes can be a little bit different from time to time, but overall you'll see the same thing play out over and over and over again. We had another one play out right here. Expand high, expand low, price pushes down, comes back, tests the origination point, and then starts pushing from there. All right, so one thing that I wanted to go through is finding how you can use this to find a strong entry. One of the common things that happens with the basic strategy is it can be a little bit broad in that all you're the main criteria of it is you're above your most recent expansion line on your directional time frame and below your below your most recent expansion line on your entry time frame. So you want them to be opposite, and the idea is that you'll get into a counter trend pullback, and then it'll fall back in line with the actual trend, and opposite for a short market. So one thing that I wanted to highlight, but we all know that it's a little bit difficult to figure out exactly where those pullbacks are going to go. So a good example that I found that was just real close, happened not too long ago, was this example that we've got right here on the 4-hour chart. So we can see at this point, we saw that we were in a market that was pushing up. We had a little bit of a range that formed right here out of the 4-hour, and then price started pushing up, and you wanted to test an entry going long at this point. Now things ended up developing a little bit differently through here and ended up reversing. But just inside of a regular trending market, and you want to try and find your way into this. We all know that wick that came down right there, those are really difficult to deal with in the moment. So this is where the master pattern can help you on dealing with that wick and getting in a solid entry at the lower side of the wick. So let me go over and find this. Okay. So this whole area up at the top is this range right here on the 5-minute. And you can do this on any time frame, by the way. So it's not restricted to the 5-minute. So let's look at what happened up until this point. Price was pushing up. We had a little range through here. Looks like that might have been in some market off hours, but then price started taking off. We went and took out some liquidity on the 5-minute, and then we formed a master pattern origination point. Now, inside of a trending market, when you form a master pattern origination point, you don't necessarily know that it's not just a breath inside of the trend, but when it comes back, maybe pushes a little bit and you get the third leg of expansion. So this would be expand low, expand high, and then we get expand low. We know that 1, this is our origination point right here, and 2, that we can probably expect a range and some little bit, it's not going to be just straight trending market anymore from this point. So how do we deal with this? So as we know, the market, once you form an origination point and the master pattern happens, then you start getting the whipsaw effect where it'll expand high, expand low, expand high, and then go into the trend. Now this ended up being the turn, but we didn't know that was the turn at this point. You still want to test a long entry. So the way that this can help you with the basic strategy is we got an expansion line right here. We're in, as of this point, we know that we're in a trending market. The market is headed long, and you know that you're supposed to get in below an expansion line on your entry time frame. So as the whipsaw happens, you can expect every expand low or expand high will eventually turn into a new target. So what I mean by that is after the market expands to the high side, that's now the new target of an expand low or of an expand high. So we have expand low, expand high, expand low, and then that became the target for an expand high, and then the price ended up reversing right there. But that was our target from way down here. So once that low gets taken out, that would be where you get your basic strategy trade, the ideal basic strategy trade. So you're underneath expansion and you're looking for price to come down and take out the expand low point, and then you're looking for an entry after that happens. sometimes it can get a little bit tricky, like it did right here, where it pushes up and then we get another small master pattern that whips through. That whips through and takes out a little bit more liquidity. But either way, this general area would have been better than seeing this expansion line and trying to take a trade right here. That's what we're really trying to avoid, is when we're in an expand low, taking it, we're looking for a general area to go and enter the market. So that's kind of where this can help you. All right, let me look for a few more examples just to make sure that this is clear. There's actually a few good ones on the Dow. I'm going to go ahead and jump over into that real quick. Okay, right here. This is a good example. So right here, we've got a fairly clear uptrend inside of the Dow. So price broke out. We actually kind of that lowest box of the range, and then we started pushing up long from there. So on the 5-minute, on your actual entry time frame, we did not get a master pattern. We were down in this small range that was caused by the expansion line, pushing up, and now we come up near the high, near the current range that it's in, and we get a master pattern. Whenever you get a master pattern after a big push, again, once you start getting the expand low, expand high, or expand high, expand low, expand high, you know that there's very likely a range that's going to start right around that area. And that's pretty much exactly what happened right here. So expand high, expand low. So once you have the expand high and expand low point, those become targets. So this expand high point, once price took that out, then we had our expand low point that was right here, and that became the target for the expansion to the low side. So if you're trying to, just to reiterate what we were saying again, if you're still trying to trade in a long market, then you want to enter your trade after that expand low has been taken out. And if you are trying to trade in the opposite direction and you think that maybe this could be a good time to possibly try a short trade, you saw the liquidity get taken out on the 4-hour and you just want to see if if there's going to be a turn, then at least get a strong entry into that. Once we had price take out the expand high point right here and went through the liquidity, then you try a trade up in this neighborhood because we just took out the expand high point. You don't necessarily know that it's going to trade, but that would be a strong entry to test your theory. So again, going back to this expand high, expand low, we can see we formed a box at the high side of the range and then price rolled off of it to the short side. So we had expand low. Keep in mind, this was the origination point inside of this range. So this was our very first master pattern origination point. We can see what happened right there. Origination point, expand low, and then price settles off of it and keeps pushing down lower. And now it looks like we're forming a new origination point, so we're going to have to kind of adjust. This is also the lowest box inside of this range, so we'll have to see if we get a rotation off of it going back up into the long side. So just a few points I want to touch on. You don't necessarily know exactly which expand high or expand low is going to be the one that takes off. There's not really a great way to know. Sometimes it'll be a 1, 2, 3, and then 4. Sometimes it will be 1, 2, 3, and it'll keep on going. That normally happens while it's inside of a trending market, and it's not quite stopping yet. So you don't really know exactly which expansion leg is going to be the one that turns into the big pushing market. But what's important is that you test them and that they help you get into a strong entry. Because if you got in, somewhere around this expand high point, maybe you weren't really messing with this, and then you saw that wicks were starting to rotate off of this, and then you got in somewhere, even bad entry into this candle, and then it snaps down, it's pretty hard to take a negative in that. And if you do, you're probably at least not going to take a negative that is, too bad. Maybe it's a break-even trade. So even if you're wrong, you can still pull a profit, or you could just use the next expand low point as your actual target. So you're not even worried about getting into the overall trend. You just want to see what happens, see if it makes it past the expand low point. So you use that as a target, or maybe the liquidity line right here at the low, because there's a really, really good chance that it can go down to that level. All right. So that was the point. Yeah, so I'll be looking for any questions. Wade, is there any comments that you have as far as the origination point and helping with some of those, helping you get into a trade and manage the basic strategy?
No, I think you did a good job explaining that. One thing I want to point out to everybody on the webinar is that if you're sitting there and maybe you're new with us, and you're just like, I'm lost, like I don't get this expand high, expand low talk. One thing I want to tell you is that if you go off the basic strategy and the videos that are in the online course, that naturally falls in line with what Shane's talking about, or when I talk about the master pattern origination point. What we're explaining is basically the mechanics behind what the software is built around. So don't worry if you're not understanding every single technical aspect of what we talk about when we talk about that deeper subject. As long as you stay in trend and you buy either below or above your expansion line on your entry time frame, that's going to typically put you in a strong position, which is what we're endeavoring to do with the software. Is we're trying to enter the trend in a smart way rather than just jumping in arbitrarily like most people. Like they're either jumping in on a moving average crossover or their MACD crosses, something crosses, and they're getting in. We're trying to give you much more of a price action framework to understand. So when you're looking at the chart, you're looking for the basic strategy, you're looking to enter the trend, you can just have a little bit back in the chart history and saying, where is there a predominant master pattern happening? And if there is something that I can clearly see, where am I in that cycle? That's really what it's just supposed to give you a little extra insight, and it's supposed to come over time. Believe me, this is not something you're just oh, okay, I get it now. If you want to do yourself a favor, just stay in trend. Yeah, regardless if you're using ATS methodology or not, staying in trend is really the only way to consistency, in my opinion. I think ranging markets are a mirage, very difficult to navigate. Trends are where we're going to go somewhere, but that's really what I want you guys to understand when Shane talks about the master pattern, or when I talk about it. It's just helping you understand a little bit of the mechanics behind the price action that ATS is built around. And the better you get at seeing that pattern, the more you can't unsee it. That's one of the things, and that's why we stuck with it so long and built the software around it, is because it's the only pattern in the market that not only adapts to all the market cycles, but it's constantly present. So there's no way to overlook it. So, but anyway, I think you did a good job, Shane, and that's pretty much all I just wanted to put out there. But go ahead and wrap up, and then I'll take over when you're ready.
All right, thank you. I was going through while Wade was going through that. Just wanted to bring up one more example so we can see inside of the Dow. And also, you look at this. I mean, it applies to the Dow very similarly as it does, gold. This applies to every single pair. They're all going to work out exactly the same, and every single time frame. Granted that you have enough distance in between your entry and directional bias. So we're inside of a long push right here, and then we form a new origination point right here. Well, at this point, we don't necessarily know if it's going to continue pushing long, but we knew for sure that it was an expand low, expand high, expand low. We knew for sure that there's probably going to be a range right here because we started a new master pattern with this box after this big push up long. Then price goes. This wasn't a very clean, or not as clean as some of the settling that we get, but we can see push through the, some of this liquidity came back, reacted to this origination point from way back here, and then ended up pushing to the long side. That brings up one more point that I wanted to make. Even if you don't necessarily get in at the expand low point, the perfect expand low point, just watching as the range develops and getting in back to what I was saying about the lowest or highest boxes inside of a given range. So we can see range started right here, and as it progresses, this was actually the highest box that we had right here, and then this was the lowest box inside of the range. We had a little reaction to this expansion line here, but that wasn't the highest box in the range. Lowest box inside of this range, price breaks out and then rotates right off of that expansion line, letting us know that the lowest orders, contracted orders in this range are being protected, and then it goes into a push. You're going to see that over and over and over and over again. It basically just comes back to get strong entry. If you're trying to go long, it's pretty straightforward to see that it's a range right here. Don't enter right here. Enter on the low side of the range. Enter on the low side of the range. That's really what this entire thing is about. All right, got a request to go over that again. So we knew that there was a new master pattern formed right here, or at least a potential one. We didn't know if it was going to turn into a range until we got back right here. So we have expand low, expand high, price whipped around, maybe you thought it might have still been in trend at this point, and then expand low. Okay, we have a for sure 1, 2, 3 leg expansion right here. We ended up pushing this low a little bit further and then came back up, did not take out the high, but we know that the high is our next target because after an expand low is an expand high until price settles, that is. So after we had our expand low, then the next, let me scrunch this up a little bit. So expand 1, 2, 3, and then 4 ended up being it just going back into trend. But again, you're not trying to trade short in here because you know that we're in a primarily long market. So back to the lowest box in the range, lowest or highest box in the range. It just depends on what your trending direction is. So we formed a few boxes through here. As of, looking back at this range, this was the highest box in the range, and this was the lowest box in the range. We have a directional bias of long. You can see it was creeping up long all through here. We're up above the most recent expansion line. We're getting a little bit of a reaction right here. But long was our directional bias. We get the lowest box in the range, and then we get a reaction to that off of the expansion line, and then it starts going into, you don't even know that it's a trend at this point, but we are expecting that the target is this high right here because that's the expand high. All right, so here's a comment from Saeed. Saeed says, price is near a liquidity line right now. Wouldn't that be a potential time to maybe test a short entry? Definitely. At some point, price is going to turn, we would all look at this and say, oh, okay, that's starting to get into the realm of overextended. And if you are going to short a market, it's best to, or if you're going to try and trade a reversal, at least do it at a higher probability point. So after price pushes and we can see that we're getting a reaction right around here, right around the liquidity line, then, we can try and trade that if you want to, or you can just stick in trend and wait for another expand low point. But in this case, so we came up, here, let's look at that. So we formed a master pattern. It looks like we took out the liquidity on the 4-hour with these right here. And then we pushed up, formed a new box on the 5-minute, had an expand high, expand low, and then expand high right here. And that was after that liquidity got taken out. And then we formed a new box at the top of the range. And then we had a rotation off of it that was actually another master pattern, expand low, expand high, and we rotated right off of that expansion line here at the top. So if you did want to try and trade right there, that was a very wiki little entry in there that probably would have been pretty hard to hold on to, and also a little bit little bit scary when it starts wicking up, when the actual candle body's up here and it's, just there off the high. That's, and you're looking at this candle that was probably blue at that moment. Might have not tested that trade, but, in retrospect, we can see it ended up working out, but, always a little bit freaky in the moment. But, regardless of this sort of behavior happens all the time where you don't, where it doesn't happen to be a scenario where you're wondering about whether it's going to keep on trending or not. So just, focusing on the highest and lowest boxes for reactions at those and looking at the general expand high, expand low points. One more thing that I think I actually failed to mention, which I can't believe I forgot this. When you're looking for where potential expand highs or expand lows will go, so after you form an origination point and you're looking for expansions to the high or low side, they tend to go and take out all of the liquidity that's nearby within that range. So what do I mean by that? We had an expand high, expand low, and then our expand high went and took out all the liquidity. Something that you need to be aware of, if your expand low goes and it leaves a little bit of liquidity behind, that's usually something to be suspect of, because the whole purpose of the expand high and expand low is to pick up liquidity for institutions to place trades of their own. So they need liquidity to do that. So you're going to see the expand high and expand low end up taking out a lot of that liquidity. All right, and got a question from Randy regarding USD CAD, just kind of looking at the master pattern on that. Yeah, we can do that real quick. All right, so 4 hour, we have formed a master pattern right here. So this is still pretty new into it. We're inside of a long market. We formed a box. That master pattern did not take shape because after our expand high, we formed a new box, but now we've got expand low, expand high, and now we're coming back down into this. Master patterns get a lot more useful once you actually go through and you get that third leg of expansion. Because if you can hit it, it comes down through the liquidity line and then it starts rotating back up. On your directional time frame, you don't necessarily want to look at, getting in on the expand high or expand low. I would recommend, just looking at it as an overall, just to the ebb and flow. Know that if you're in a market that's going up long, you suspect that this is long and it does end up taking out a previous expand high or expand low point, just be cautious of it. But, we want to ultimately follow along with our higher time frame direction. As far as actually practically applying it to your trading, it's going to be a lot more useful on your entry time frame, because then it'll help you fine tune those entries and, get in at a general level that's going to be a lot stronger, because telling the exact trend is really difficult. We just have to kind of look at it, and using our experience and some past reactions, we have to not guess, but make a very educated guess on what direction we think the market's going to ultimately go. And while we're doing that, we want to at least give ourselves the best shot by getting a strong strong entry into that trade. So this is an image that I took of, I think it was the Dow that I was looking at. And it basically illustrates what I would call a perfect master pattern. So I just wanted to go through this before we jump into the volatility report, because I'm hoping that it might, one, be kind of a good teaching lesson, and that also it can kind of illustrate what some of the comments that are made on the volatility report when making it and everything. So the first box right here, this is basically, it formed an origination point. We can see there was an expand high, expand low. So that let us know origination point from this box. And it was the first one. Couldn't get the whole thing or the previous market in the screenshot, but I believe it had been going short. And then this was near the low of the range. So we formed an origination point right here. After that, expand high, expand low. And then after that, expand high, expand low. So it just progressively got larger and larger. After the expand low here, this became a target. This previous high was a target. We had an expand high. Now, one thing that I wanted to bring up about this point right here, we had mentioned it a few times on previous webinars, or just as we've had webinars over the last few months and everything. But when you get a box at the high or low of the range, those are going to be much more reactive than boxes going down the middle of the range. Those orders there seem to affect price a lot more than orders down the middle of the range. So we had a box, and we can see that this expansion line that was formed from this box lines up almost perfectly with the previous high, the previous expand high that we had back here. So when you see something like that, and it had just taken out an expand high point, those are two things that you can use in your favor, or two reasons to justify a theory of a potential short trade. So again, expand high, formed a box right at the high. If you wanted to test a trade going short, that would be a good time. Then we pushed down, had an expand low, perfectly took out this last expand low point, and then ended up pushing off. One other thing that I wanted to bring up inside of this range, so we can see that this overall, our 1,000-foot view is that this is a master pattern. But inside of this master pattern, there's also a little mini cycle. We can see from this box right here that we had an expand low, expand high, expand low, expand high, took out liquidity, expand low, and then that led into the expand low from the overall master pattern that was taking place. So they all kind of play into each other. I like to liken it to small cogs spinning bigger cogs, spinning bigger cogs. And it gets even more once you get into the higher time frames as well. So just wanted to kind of take a second here to illustrate this. I thought, again, it was a really good example of, even if you miss this entry up here or something like that, there's a good chance if you wait and give it a little bit of time, you'll get another opportunity in the form of a smaller master pattern taking place inside of kind of the larger overall picture and framework.
Hey, Shane, can I interject something real quick on this?
Sure.
So, hey guys, Wade here. So Shane's got this ideal, kind of expansion happening, a multi-leg expansion, and this is kind of, understanding this movement right here is kind of the essence. If you can spot and understand this movement, this is what really messes up a lot of traders, is not understanding this. So if you could be aware that when this is happening and know a little something about it, it's definitely going to help you just add a little bit of a filter to your analysis and understand what the potentialities are of what's happening. But one thing I wanted to mention with this is that this is just looking at a chart straightforward. We're not looking at a higher time frame or lower time frames. We just have one chart here. But if you guys imagine this multi-leg expansion here, and let's say this is a 5-minute chart right here, and you see this activity starting to unfold, these multi-legs, the first swing high, swing low, swing, and you see this unfolding, but you're backing it up with, say, a 4-hour chart, and you see that the 4-hour chart is long, then that's really, where this can come in handy when you spot this, and it's clear as day, and it won't always be clear as day depending on your time frame. Things set up differently throughout different time frames, but when you do spot it and you see that you're attacking a predominant swing low point, and you know that, let's say, the 4-hour is clearly long, then you'll want to pay attention to buy, possibly as a buying opportunity on the swing low points. So you're only trading the upside of these expansion legs as they unfold. So it's not something where you just want to get lost in looking at all the swing high, swing low points and looking for this funneling out price action. But when you marry something that is clear as day, that's starting to happen like this, but then marry it to a higher time frame, then the idea is to only pay attention to one side of it. And that'll give you your if it's long, then you buy the swing low points, and your swing high points become targets for progress. And if you don't snap those swing high points hard, then you're probably going to turn around and go back to the last swing low point, and then you buy it again down there. But again, just not without having to know everything about this. If you guys can spot it when it will come out, and it'll be clear as day then you can use that information as at least a filter to understand what possibly could happen and where the predominant highs and lows are, where the market's likely to move to. So anyway, I just wanted to point that out. So Shane, go ahead and get back to what you're doing there.
All right, thank you. So leading into this, one final point I wanted to make about this, and then we'll just go ahead and jump into the volatility.